Hello there, Maverick Currency traders. This is Rob Reinhold. I'm joined by Mr. Ankit Sharma. This is the Currency Room. Going into the second week of August. First week was so-so. I think it's going to start to get better. Let's jump into it. In this session, we're going to be talking about what happened last week. We're going to be going through all of the currencies, scoring them from +3 to -3, and that tells us where to pair up the strongest against the weakest.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
Let's first start off with equities. Equities recovered. Last week, I said that was a classic blow off top. However, I really wanted to go through this in this session because for some of you who are new, you haven't seen these kind of market situations before. And a blow off top means that all the buyers are already in. And the last bit are all the bears that were waiting for there to be a pullback. They finally said, I've got to get in. And the people that were short finally said, I got to get out. And you get this huge blow off, and then it seems to crumble because there's no buyers left after it. That's what we saw on last Tuesday and Friday. And I came on and said, people, that was a classic blow off top. That being said, the next week or two after a blow off top need to be lethargic. It needs to be, there's no more dip buyers. That's why it was a blow off top, because everyone was already in, so there was no one left to buy dips in the future. Well, guess what? The dip buyers were there. The dip buyers were back. So looking back on Thursday, we can't really say that that was a blow off top because it didn't have the action after it. That being said, the markets are not, well, the NASDAQ is at new all-time highs, but the S&P is still a little bit off. We'll take a look at equities. Equities aren't really driving currencies or really crypto at the moment, so it's really not as important. We also got a Bank of England rate cut. However, it was very close. 5-4 was the vote to cut rates by 25 basis points. That was actually much tighter than expected. So the pound actually went up on this news and was the best currency for the week. Then we did see some crypto recovery, but when you take a look at, again, correlations between the equity markets and the crypto markets, sometimes it's high, sometimes it's low. Yes, cryptos did recover, but they did not recover even close to what the equities did. Last week, we had some CPI reports out of Switzerland. Was better than expected. But again, it's still zero. Zero is not that big of a deal. The SNB isn't likely to make any changes on it. We got a very weak ISM services report out of the US. Anything above 50 is growth. Anything below 50 is contraction. You can see we're right there. We're right there on no growth. We got news from New Zealand, a little bit better employment report. The Kiwi did go up this week, had a nice little run. And then last, we had Canadian employment report. It was a mixed bag. The unemployment rate went lower, but they didn't create as many jobs as was expected. We'll take a look at the CAD as well. It really hasn't been in play for a very long time, and really I don't think anything has changed on that. Let's go and look at the final numbers for last week. Start off with what the equity markets did, right around 2.5%. You remember we were down about 3.5% last week, so a nice little bounce back. Crypto up 8%, but we're going to take a look and see that was mostly from Ethereum and Litecoin. Bitcoin hardly bounced back. Gold made new all-time highs this week, so gold is back into the picture, and oil continues to be weak. Let's take a look at the equity chart. And this is a pretty, I'll use the word funny, pretty funny looking chart. Not like haha funny, but kind of strange. Take a look at this upward bounce. But take a look at how absolutely sloppy and messy it was. So we gap up and run, and then we gap up and fall. We gap down and run, we gap up and fall. We gap down and run. As you can see here, we had alternating days. Monday, Wednesday, Friday were up days. Tuesday, Thursday were down days. The dip buyers were there. They were there. When we got some selling, they showed up the next day. And you can see we're back up close to new all-time highs. Very close to new all-time highs on the S&P. So for equities, I'm reluctantly bullish again. I had backed off a little bit last week to more of a +1 to where I'm mildly bullish. I am reluctantly upgrading this to Ankit. I want to hear your thoughts about equities here.
Yeah, Rob, I'm on the same boat here. Very surprised. It was a classic blow off pattern last week, and the price action just been resilient this week. So, the big question really here is that do we just break out to new all-time highs, or maybe we just touch that resistance and go sideways? So, I think this is where I think probably go sideways a little bit. I know we have made a quick recovery. A lot of dip buyers came in. But I think at this point, like you use the word reluctant, this is where I would not want to take that part in a breakout here. Maybe we go sideways once we touch that resistance. We are also in this, peak summer trading environment as well. So, this is where, there's not a whole lot of headwinds that we are having in the markets. But I don't think we are out of the woods yet. We saw that big move last week off the jobs report. And I think next week we also have inflation data coming out. And, as we talked about, or the Fed has pointed out many times that there could be some, risks on inflation increasing. So what can really pause this rally? I think if we see a pickup in inflation numbers next week. So we have economic data coming next week. We have a lot of economic data coming until the next Fed meeting, where markets are already pricing in a 92% chance for a rate cut. Now, I think that's where we could see a surprise, where if this numbers start to dwindle or we start to see inflation picks up, I think markets can change a little bit. So I think we'll probably be in a little sideways markets here for now. But I'm mostly focused on the data here, because clearly data is the one that's going to drive the move higher or lower from here.
Yeah, and I think as we get into Forex here, we saw a classic risk on, risk off trade. So dollar, yen, Swiss franc, which are the currencies of safety, all went lower. And we got Aussie, Kiwi, and the pound going higher. Pretty classic risk on move. Again, the pound got a little bit of surprise from the Bank of England. Wasn't as hawkish as the market thought. So I think that's just a little relief rally from the pound has been pretty weak over the last month or two. Aussie, to me, was the best performing currency. I know the numbers don't say so, but it was very resilient last week. I'm definitely going to be looking at the Aussie in play on the long side. And I think the dollar is going to be the best trade this week. Up or down, I do not know yet. We're going to take a look at those charts. Here's crypto. So Ethereum, Litecoin really carrying all of the load here. Bitcoin only up 2%. Cryptos look okay. They don't look great. They look okay. That being said, do I see them breaking out to new all-time highs? Not really. I don't see that in the cards over the next week or two. Unless like the equity markets can break out and run above their all-time highs, then I think crypto has a chance. But I don't really think that's going to happen. I'm with you, Ankit. I think we get more slightly bullish to sideways price action. And then we go into the September period, which is notorious for sell-offs. So what does this mean for us? Well, we got a +2 on equities. Let's take a look at the bond market. Here we have the yields bounced right off of 4.2. That has been the bottom. That has been the low for the last 6 months. We bounce off the bottom, and we usually go back up to 4.5, even sometimes up to 4.6. I actually like the dollar long because we are seeing this bounce back in bonds. We'll take a look at the dollar chart. The dollar chart uptrend is definitely in some jeopardy here, but if it can bounce here, I think it's got a decent chance to be in play. And if we get a hot inflation report, that 92% chance of a Fed cut in September will probably go down to a 30% chance. There's going to be some real repricing, and that should be very helpful for the dollar. And here we have the basket of cryptos. You can see the basket as a whole is breaking out. I am skeptical, and of course, I could be absolutely wrong. I'm skeptical here that we get a really strong breakout and run in cryptos. I just don't see, we've gone so far. I just think at the end of this, we just don't have the energy to do it. Let's talk about what's on the schedule for next week. First, the RBA. So we got the RBA. Expectations are they are going to cut rates by 25 basis points. The Aussie has been strong going into this report, which means the market is saying this is a one and done. If the RBA says we're looking to do more, the Aussie is in trouble. If not, once this rate cut gets behind us, then all of a sudden there's no more fears of more rate cuts. As Ankit said earlier, this is the big news of the week. US CPI. The core is supposed to be at plus 0.3, the headline at 0.2. If either of these numbers are hot, and remember, I've said before in the past, if one's a little bit hot, it's not going to matter. This time it does matter. If one of these numbers is a little hot, then it's going to be a bit of a trouble for the equities. If it comes out as expected, I think these numbers are still a little high. I don't think the market's going to be super happy if they even come out as expected. I don't think they'll drop, but I think it's just, okay, it wasn't a disaster, no reason to buy, no reason to sell. If for some reason it comes out better than expected, then all of a sudden that September rate cut is absolutely a guarantee, and we'll likely see dollar trading lower and bonds maybe even go below that 4.2. Aussie's got some information here on Tuesday night and Wednesday, so if you're trading Aussie, make sure you're watching this. And after that, okay, UK GDP on Thursday. That's likely going to move the pound a little bit. After that, I don't see anything that's really going to move these markets. So we got RBA Monday night, really Tuesday morning, but Monday night. And we've got that US CPI report on Tuesday. So I expect there to be a good bit of movement on that Tuesday next week. Let's go through all of the currencies and score them from +3 to -3. First up is the cryptos, Bitcoin. Bitcoin is definitely the underperformer here. As you can see here, once we broke down below that little bit of support, we're back up to that level. We're back up to that level, but not quite there yet. I don't love cryptos here, but I definitely don't like Bitcoin here among the cryptos. Bitcoin Cash looking better. Again, we've got more of an uptrend here. You can see we got more of an uptrend, some resistance up here. Bitcoin Cash has been doing really probably the best of all of them. But here we are with Ethereum. Ethereum has clearly broken out here. I think this is the one. We are running right into a 4,000 number. Likely get a little bit of resistance there, but I think a pullback, you can get a pullback to this 38, 38.50. I think it's worth a shot if you see some good price action. Litecoin also breaking out. I love this kind of price action where it breaks out, fails, but then absolutely refuses to go down and then moves back up. If you are going to be in cryptos, then Litecoin and Ethereum are definitely the place to be. All right, let's go through some Forex.
Absolutely. Well, let's just begin with the US dollar. And you can see that this chart, it doesn't really look like a great long, but at the same time, I would say it doesn't look like a great short either. One of the patterns that we look at in trend changing moves is making higher highs and higher lows. And if you just take a look at price action right now, I mean, I would say that I know the price action kind of looked lousy here, but I mean, we're still making a higher high with a bit of a higher low here. So I'm not really like Rob, you said, I'm on the same boat here. I do like the dollar here, and we saw that dollar could really pick up. But we saw back in the late July when we saw that big jump in the dollar. So dollar is the one that's just moving aggressively in both directions. So going to next week, like I think it's just going to be pretty black and white, one way or the other. Either dollar is going to be the strongest currency, or it's going to be the weakest currency. I think inflation is the big story here. And all, not just inflation, but I think all the economic data has been the big focus here because we've seen the story play out over and over where the markets get ahead of itself. Right now we're expecting 2 rate cuts into the year end. So we're seeing a 92% chance for a rate cut next month in September. So markets are definitely getting ahead of itself. Now, if anything happens, market can retreat and price action can totally reprice. So I think next week is where I am very much in the middle. I'm ready to respond either way, but I do like the leaning towards the long side because I think the risk here is more towards a pickup in inflation. I'd rather than a drop in inflation here. I think that's the one that we're going to focus on. But you can see that trend score is a 0. Definitely there's velocity, but overall, keep in mind trend is not so strong either way right now. And if I take a look at these strength in these trends, I mean, I've liked yen overall, and you can see last week when we had that big drop in the markets, the risk-off rally or risk-off move in the markets caught that rally in this yen. But you can see that at the end of the day, there's not a whole lot of fundamentals like lying behind it. Bank of Japan is not doing anything, so we expect these rallies to be shorted. So I know we are seeing that the price has totally rolled over here. And again, if this is where you got to take a look at dollar as well, if the dollar picks up, I won't be surprised that yen actually go get back towards the support area. So I think next week is good. This is good for both the dollar and the yen. And for me, I think I like the yen short a lot better here, especially as the market's looking a lot more bullish. Now, when we go into Swiss franc, I mean, this is one currency. I've been more on the sideline. I mean, this is a currency that's just not really advancing nor declining. But you can see that for the first time in a long time, we are seeing the prices kind of coming under pressure here. Now, is this related to trade? The tariffs against Switzerland for I think 39% here, possibly. I think if a trade deal comes through, we probably could see a move there. But just trading the price action right now, we are noticing Swiss franc getting weaker. It's not catching a bid. Even last week, it didn't really catch as big of a bid on that risk-off rally in the market. So that's a good sign. So I still like the Swiss franc to the downside, but I'm just keeping in mind is that, the ranges are still much smaller. I mean, if you take a look at yen, take a look at dollar, I think the ranges there are much bigger. So there's a lot more meat to be had on the bone here. But if this one gets below that 50-day moving average, perhaps we can see a bit more acceleration. This one, as the trend says, this is 0. It could really go either way. It's more in the crossroads here. But on the other hand, I really like euro. I mean, take a look at euro, and it's actually deviating from that Swiss franc. Usually, Swiss franc and euro are kind of moving in lockstep here, and this thing has made a full recovery. Now, when I take a look at even European bond yields, they are looking pretty strong and rising. I think that's just going to help the euro to stay relatively stronger. So I do like that's the one currency that I'm a lot more clear on is what I like is a long euro here. So far, good recovery. That's a sign of a good, healthy, strong price action where it recovers much faster of that down move. So I do like euro to the upside, and that's one of the only currency that looks the best on the trend score. Now, when I go into the pound, and I mean, this is where we talk about repricing. I think markets were a lot more expecting a dovish Bank of England, and they came out and it was a little bit more hawkish. So that's where we saw a bit of a repricing. Has been weak for the last 2 months, and we just see a bit of a rally here. Now, it is clearly getting into the overhead resistance, but I think we could easily get above that, especially if we can get above that 20-day moving average. I think we can we can get above it as, we highlight the velocity score there. We are building up the energy and we are not really pulling back or tracing. I think it's a good sign that I think it wants to go higher. So, after a while here, I think I do like the pound a little bit onto the upside. Now, when we go into the growth currencies, I know CAD, to take a look at that, trend 0, velocity 0, not a great currency. Now, we had a negative jobs report out of Canada today, and now the traders are pricing in a rate cut. Remember, Bank of Canada has kind of been on hold for rate cuts. Now, traders expecting a rate cut. Now, no, if you look at the price action, it doesn't really give you a good indication which way it wants to go. Overall, this is a sideways play. Trend is zero. So I think there's better things to be traded out there. Now, Aussie, as Rob indicated, I would agree. When we look at the last 4 days, Aussie had a nice little run. But at the same time, I want to highlight that the prices are still moving in that range. We got that upper end of the range and lower end of the range. Now, next week we have the RBA rate statement. Remember last time they surprised us by not changing their rates, not cutting rates, and that was actually a bullish sign. Now this time around we have a rate cut, but again, I think the bigger focus right now is what the central bank's going to do, and I think the expectation is that even though a central bank cuts, it's more like a one cut and done and wait and see approach. So not really seeing that in the price action. Again, if you're holding or trading the Aussie around the news event, I won't be surprised that we get an initial dip. But I mean, just like what we saw with the Bank of England, it's not about the rate cut. They did cut rates and the pound went higher because the focus was more on the sentiment, or his focus was more on their outlook. And the same thing goes for RB as well. If they get more dovish, I think the Aussie will fail. If they stay on the hawkish side, I think then Aussie's going to shrug off that bad news and just try to get towards the upper end of the range. Overall, you can see trend is a zero, so nothing to be too excited about until we really break those key technical levels. And talk about technical levels, I mean, take a look at Kiwi. I mean, this is the one I would say has been kind of trading in that range for pretty much since April. So you can see that this thing, test the support area, try to rise above it. So there's pockets of strength and weakness, but you can see overall, it's not something that you want to buy and hold for a little longer. We get 3-4 days of down days, 3-4 days of up days. That's just the way it's moving. So trend is a little bit weaker compared to the Aussie. So I think that's the one thing we're gonna keep a note on. Both the Aussie and Kiwi, in a grand scheme of things, they're just moving sideways with few pockets of strength and few pockets of weakness. So, as we look at all these currencies, Rob, I think we are kind of looking similar to what we were, 2 months ago, where a lot of the currencies kind of got in the middle, where the direction was just unclear. And I think that's really where we are. And I think that's why we need to kind of see where the next big move happens.
Yeah, thanks for the analysis, Ankit. And when we rack and stack them here, you can see that, Ankit, you're exactly right. It's not like, you feel it and you see, you feel it, you see it, you say, hey, things aren't moving. But when you actually apply a hard scoring system, you can see that it's right here in the data. It's right here in the data that things are not clearly trending at the moment, other than Euro. Euro is trending, and then we've got some cryptos that are trending. But again, they're not trending as strong as they usually do. They're just slowly grinding higher. So where does that lead us as traders this week? It doesn't lead us with a lot of options here. That being said, I'm 100% with you, Ankit. I think by the end of next week, the dollar is either going to be a +2 or a -2. I think the move is going to be that pronounced. So I do like dollar just for the fact I think it's going to be the biggest mover for the week. What's moving right here, right now? You can see yen, dollar, Swiss franc. That risk-off move is trending, and the risk-on move, Aussie, Kiwi, pound, and the cryptos are moving. So if you want to get onto something on a little bit shorter term, I think this is exactly where you hunt. I think this is where you want to be. You want to be long Aussie, and you want to be short yen, you want to be short Swiss franc, and maybe even short dollar earlier in the week. This is where I think you want to be hunting and looking for trades. If you're looking for the big trade, then I think this is all about dollar. And that's going to happen on Tuesday. So let's talk about that as well. For the cryptos, Ethereum looks the best here. And in the past 30 minutes, we've seen a breakout above 4,000 here on Ethereum. Look, this thing's got all the momentum right now. This is a 100% momentum play. If you want to play these, you got to get in, you pick your stop, and you ride it for as long as it goes, and then you get the heck out when it finally stops. Where's the buy point? It's already at the buy point. It's at the buy point right here on this breakout. So for me, again, I'm not looking to trade cryptos here. I like there to be more tailwinds behind this whole thing, but it looks like a decent trade here. Right here, right now, again, Euro, Aussie are the strongest. So I want to take a look at stuff like Aussie Yen. Aussie Yen, let's take a look at the daily chart. You can see it looks pretty much like the basket chart on the Aussie, is that we're right in the middle of the range, but we still have some room to run. We have about 100 pips from where we are right now up to the top of that range. I don't hate the trade. I don't hate the trade at all. And you might get that breakout. You might get that breakout and run. But remember, we do have the RBA report. So I don't think you want to be putting yourself in front of that freight train. So let's take a look at Euro Yen. And you can see we've got something fairly similar here where, right up here at 174, let's call it, is the resistance level. But here we are at 172. We've got a lot of room from 172 up to 174. And then if we do get a breakout and run, this could be a great entry point. And we're right at the turn here. Look at this EMA coming down, starting to trade up. We got this RSI come down to 50, starting to trade up. We're about to break out of those parabolic SAR. So for me, this one, I like this one. And we could get a breakout and run past that 174. I think this one's got a lot of meat on the bone. So this is my favorite Forex trade as far as just relative strength, what's happening right here, right now. But my favorite trade for the week is going to be strong dollar versus weak yen. Now, I'm making this call not because I think it's the best trade technically, but when I look at my analysis, this has the most potential for a large move this week. And that's what I usually hunt for when I trade Forex is large moves. So I always try to find where's the largest move. That's where I want to be hunting. And I think this is going to be it. Now let's talk about that Tuesday report. Tuesday report comes out. The inflation is not hot. It's actually cool. Dollar goes down. Dollar goes down and yen probably goes down too. So we probably have, obviously dollar will go down more than yen, but we're not going to be in two different currencies. If US inflation is weak, that's not going to spike the yen. But if US inflation is weak, it is going to spike things like the Aussie and things like the euro. So I definitely don't want to be playing euro dollar going into that report. But I do like dollar yen because, if the inflation is below, then both of them will fall. Dollar will fall more than yen, but you're a little bit insulated. But on the flip side, if that report comes out that inflation is hot, dollar should spike, yen should go down, or at least stay where it is. I like the trade. Where's the setup? Again, there's no technical setup here. This is just a setup on news. This is simply a news trade, meaning I think that the reward is much greater than the risk. Okay, what do you want to take a look at?
Hey, Rob, I'm on the same boat here. I think dollar is going to be the big mover. Question is, which one looks the best? And, I think just something we saw like last week before that jobs report. Once the dollar start to run, doesn't matter what currency pair you look at. Big moves happen everywhere. So I think going to next week, dollar yen is definitely on the top of my list here. 148 is the level of resistance in that little channel that we're getting here. If we can start to get above that, we probably see a bit more of a run here. You can see the prices have been very compressed for the last, we talk about recovery here. There's no recovery in this one. But clearly yen is looking weak, and I think we could see dollar yen kind of move higher. So my initial premise going to be, let's get to above that 148 area. As you can see that after that, like 149 to 151, there's definitely room for this decline. Rob, the other one that I like is dollar Swiss franc, and this is more from a technical standpoint. Take a look at this one, zoom it out a little bit, and this thing is just acting. It broke that pretty important support where the line is drawn. As you can see, we have stayed below that line. The last time we rallied up to it, we pulled back. Now, take a look at what's happening here. We did rally above, make a new high, and now prior resistance is now support. So I think this is one that could easily get towards that 82 area if this dollar does strengthen. And I think everything else against it probably will weaken. So dollar yen is really looking good. And I actually really like dollar Swiss franc here as well. Another pair to take a look at, Rob, is Euro Swiss franc. And, Euro Swiss franc is a boring currency pair. But, from time to time, we look for that divergence. I mean, take a look at that. We made a pretty good recovery, going from the bottom of the range now to the top end of the range. Now, today, this is the first week we've seen that Swiss franc move lower. And that's the biggest move since April of, early this year. If this can really get above it, I think we can probably see that divergence start to come in play where, euro, as we looked at the chart, looking pretty good. Swiss franc, which is now in a crossroad, start to weaken. I think this is the one that I'm paying close attention to. And this is why, I looked at dollar Swiss franc rather than euro dollar because, in that bunch, I do like Swiss franc on the short side rather than the long side. So these are the two ones that I'm taking a look at. But like you said, I think the biggest mover is going to be the dollar, and regardless of whichever side it moves, I think it's going to be a big move. Now, when it comes to pairing, I think it's pretty clear. Swiss franc is showing more weakness. Yen is showing more weakness, so that's probably better to pair with. Now, if the dollar does weaken, then I think we can go with the pound dollar maybe because that's another currency. That's the one currency that I do like on the long side is the pound dollar. As you can see, this one does have room for this to rally a little bit higher about the 137 area. There's a little bit of that, reclaiming that area. Also, pound yen. This was one of my top trade this week. Was pound yen. As you can see that since the news or that came out, you can see a steady incline all the way up to the 199. But if it does break out, I think if we go longer term, 199.50 to 199.80 is a good level of resistance. And if it breaks above it, you can go back in time. As you can see, then that we almost go back to the highs that we saw last year around the same time. Another one, Rob, I was on my list was pound Swiss franc, and again, same thing, playing that relative strength and weakness. If the pound does stay strong, and if the Swiss franc it does stay weak, and I'm finally seeing some opportunities in Swiss franc currency pairs, which usually I kind of stay away from. But you can see that this thing is finally above that 13 EMA. It's showing us that turn. So I think any pullback there probably be buying opportunity. And Rob, we can also take a look at Aussie Swiss franc for the RBA there, because I think same thing. You are seeing a turn happening there as well. So while we are all focusing on the dollar and we're all focusing on the yen, I think the Swiss franc currency is kind of making a play here as well. So what we're looking for is a follow through. And I think that's what I'll be looking into next week as well. Does the Swiss franc stays weak? And if it does give below that, the 50-day moving average, I think I want to play more directionally. And I think at that point, we'll probably see a breakout happen in all Swiss franc currency pairs as well. So that's what I got, Rob, but I'm excited for next week.
Thanks, Honky. It's going to be nice next week if we can come here with a better trade board and where the trends are actually in +2 and -2 territory. So again, U.S. inflation data on Tuesday. That is the big news that is going to be moving pretty much every market. It's going to move gold. It's going to move oil. It's going to move the yen. It's going to move everything. So pay attention to that on Tuesday. Everyone have a great weekend. Thanks for joining us. Bye, everyone.